Um, Hi guys, what's up? It's an AUD here. So today I want to break down a clear bearish continuation setup. I caught on Australian dollar and Swiss franc. Well, first of all, from a fundamental point of view, the Australian dollar is a commodity currency heavily tied to global risk appetite and the Chinese demand, with growing concern, about a global slowdown. The AUD, of course, it's gonna be under pressure. I mean, it's under pressure. Meanwhile, the Swiss franc is well, I can say it's a premier safe haven asset. During times like this of market uncertainty, investors flock to it, strengthening it at the same time. So this creates a perfect storm for the pair to move lower. Weak commodity price and the risk-off environment are fundamental drivers for this downtrend. Okay, of course, we can see here it was in a range in a daily, but it break that, and I knew it will break mainly because of the fundamentals. Now, market sentiment, which is my second point of analysis, my second panorama of analysis, fundamental, then the sentiment. If we look at the sentiment, well, the chart has been in a sustained downtrend, which means the market sentiment is overwhelmingly bearish. Traders are not buying dips. They are selling rallies. These sell the bounce. Mental keeps constant pressure on the pair. When everybody is aligned in a bearish direction and acting on it, it fuels the trend and create this smooth, consistent moves down. Well, now if we look at the technical part, well, I think this is where the setup becomes crystal clear, right? On the 4 hour, as you can see here in my chart, on the 4 hour chart, the price is making clear lower highs and lower lows. We recently saw a price rally up to the retest, but of course here, if you ask me how I got here, well, I mean, a trend line can explain this. You see what happens here? You see what happens here? We saw this huge, very, very huge candle breaking this area. Okay, so what I wanted to do here after this candle was waiting for a confirmation. And I got my confirmation right here. I entered a bearish trade, set my stop right here, okay, right at this zone here, and then the only following thing I had to do was to wait. Okay, was to wait. After the pair went down and down and down, in this region here, okay, in this region here, I took my profits, as you can see, because this trade is a trade of this last week. I can show here, okay, we have here, as you can see, this is the trade. This is the trade. I closed, I took my profit, and then I left a small portion of my trade, 0.01 lot size. Remember, this was a $10, cent account, of course, and my challenge is to grow this account to $100,000. Okay, slowly compounding and compound. As you can see, I have doubled the account already. It's $27 now, and I'm sure that this following week we will be, maybe going to $35 or maybe 40. Oh, well, I will see, because the weeks are different. And then I locked this smallest portion of my trade, and let's see where it will reverse. Let's wait until we see where it will reverse. As you can see, this is a downtrend, and maybe, if possible, it can go until, I don't know. We'll have to wait and see. But what is mine, I took it already. Okay, it's here. I took it already. But I always like to, leave a smallest portion of my trade to ride the bearish move. Remember, risk management is very important. If you are risking more than 2% of your account, well, I think that is not good. It might be good depending on the strategy, but my strategy doesn't allow me to do that, because I have to endure the waiting. So 1 to 2, it's enough, and then it allows me to widen my stops. This is swing trading, it's not a day trading. So okay, guys, if you want to join me in this journey, just follow, okay, follow my page. Yeah, see you down there.